LaRocha here. Let's get right to it. The Asian market just closed, and it's sending a really mixed signal as we head into the U.S. session. Now, the headline number looks a little soft, but believe me, the real story is hiding in the fund flows. So let's map it out. So you see the Korean market in the red, and the first question that pops into your head is probably this one, right? Is the AI story over? Does this little bit of weakness mean the big rally is taking a pause before the U.S. markets even open? It's a totally valid concern, especially on a holiday-shortened week like this one. And there's the number causing all the chatter. The KOSPI, down just 0.21%. You know, on the surface, that just looks like a quiet day, maybe some consolidation, but the real intel, the stuff we can actually use, isn't in that headline number. It's all about where the money was moving. To really understand what this means for us in the U.S., we've got to deconstruct this conflicting close. It's a classic situation. The surface is telling you one thing, but the undercurrents are telling a completely different story. Okay, now this is where the real story is. Just look at the two sides of this coin. Over on the left, you've got your local retail investors. They were net sellers, big time. We're talking 717 billion won out the door. But then, look to the right. Foreign institutional money did the exact opposite. They came in with a net buy of over 500 billion won. You see, a divergence like that isn't just noise. That's a critical signal. This kind of dynamic actually has a name. We call it the Great Handover. And if you can understand what's happening here, it's key to mapping out the potential moves for U.S. tech and even industrial stocks tonight.
So here's the bottom line. What we're seeing is shares moving from what we call weak hands, think retail investors maybe taking some profits off the table for year-end, over to strong hands. These are the institutional players, and they're positioning for longer-term growth. When you see this happen on a dip, it often means a pretty solid floor is being built under the market. It's a shift from just chasing momentum to some serious fundamental accumulation.
Which, of course, leads us to the most important question of all. If all this foreign capital wasn't just buying the whole index, then where exactly did it go? The answer gives us a really direct clue for the U.S. session. And here it is. This wasn't some broad, passive bet on the market. Nope. This was a highly targeted, almost surgical allocation of capital, right into the key global supply chains that feed directly into U.S. demand. They targeted two main sectors. First, semiconductors. Big inflows into SK Hynix. Now, that's basically a direct vote of confidence in the whole AI infrastructure story, and it's a fantastic proxy for stocks like Micron and NVDA. Second, autos. The buying we saw in Hyundai suggests a strong belief in the U.S. consumer, which gives us a read on names like GM and Ford. All right, so taking that data from Asia, let's build our map for the U.S. session. We can now lay out some really clear scenarios and, more importantly, the key levels we need to be watching. It really boils down to two paths for today. The bull case is pretty simple. If NASDAQ futures can hold above 23,500 on a closing basis, the positive momentum, that Santa rally, stays intact. The bear case, though, is what we have to be vigilant about. If the 10-year yield breaks above 4.2%, or if the NASDAQ slips below 23,400, well, that could invalidate the whole bullish setup and suggest this was just a false breakout. And one more critical piece of context for today. Remember, it's an early close at 1 p.m. Eastern. That means thin liquidity. And thin liquidity can seriously exaggerate moves in either direction. So just be aware that volatility might be a bit higher than you'd expect on pretty low volume. So, to make all this truly actionable, let's just distill it down into a clear set of trading zones for the session ahead. Think of this as your tactical cheat sheet. Okay, here's the plan, laid out nice and simple. The bull zone is active as long as the NASDAQ stays above 23,500. And for confirmation, you really want to see a strong closing price, not just a quick pop during the day. Now, the bear zone gets triggered if the NASDAQ breaks below 23,400, or that 10-year yield punches through 4.2%. And the confirmation here is actually to be a little skeptical. Remember, big moves on thin volume are just less reliable. And of course, keep an eye on our proxies. MU and NVIDIA for semis, GM and Ford for autos. Watch how they're performing relative to the rest of the market. Look, at the end of the day, the data from Asia gives us a map. It's not a treasure chest. The key is simply to react to the levels and the confirmations as they play out. Trade what you see, not what you think. I'm Laura Bisha.